rather good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Farezi. There's a bit of a green on the screen, at least at the moment, because the Nifty is holding on to the level of 22,500. But it's just a smidge of green, to be honest. 0.16% higher for the Nifty. Bank Nifty has been outperforming. So today as well, it's up around 0.3% off the highest point of the trading session, but nonetheless a bit of a green. Broader markets too are participating a bit. Interesting bit is that India VIX has actually cooled off. So the last time I checked, India VIX was down about 5%. Let's see what it is doing right now, because that was the expectation that it will be between 23 to 24 right now, and as and when the elections do get over, it will come off. But interestingly, actually it's at the highest point of the trading session. So yes, at the start and during the day it was down 5%, but towards the end of the trading session, as we're getting ready for that exit poll outcome, it's trending higher. So we are back close to that 24 mark. In terms of the sectors, it's actually real estate that's managed to perk up. So Brigade, Prestige, Alodha, these are the names which are up anywhere 3 to 5%. While on the other hand, Pharma is coming under pressure, FMCG and IT as well. So clearly defensive taking back seat, and autos too, ahead of the auto sales data, which is expected tomorrow, is a bit more tempered. For now, Nifty has actually fallen a bit. So in the last few minutes itself, from the time we opened the show to now, there has been a dip of almost 30 points, and there's a sharp slide which has happened in the last few minutes itself. So we're broken below 22,500 now. As has been the case, Aisha, it seems like we're in for another topsy-turvy ride. Volatile? Clearly, yes.
Yeah, and that's been the case for the many days, so kind of getting used to it now, right? Unlike, of course, yesterday. But look at the Adani group of stocks. You know, while the market may be doing what it's doing and the index is cooling off, Adani Power has, I think, surged 11%. Adani Ports is higher by nearly about 4%. Adani Enterprises, 6.5% of a move. And Adani Green as well is higher by about 4% as we speak right now. So, you know, clearly a clear bull run right now in force when it comes to at least the Adani group of names. Of course, there's Bajaj Finance also, which is holding up 2%. Infosys higher by 2%. L&T is back in the green. Tata Steel has actually seen a rebound. Still got a long way to go before it undoes yesterday's damage. HDFC Bank still holding out. ICICI Bank in the green. But yeah, we've definitely fizzled out from the top of the day. Kunal, guess another day, somehow 1 hour, we'll have to deal with this kind of volatility for the index.
Yeah, I think it should be the last 1 hour for this week.
Last 1 hour.
But I believe it's a normal course of the market that to be a bit more volatile on the back of expectations from the exit poll tomorrow. You know, the Nifty's come back again to that 22,500 mark, and you know, like over the last couple of days, we've been maintaining that it doesn't make sense to try and initiate any kind of fresh longs or maybe even short positions on the indices, given the way volatility shapes out, because you know the real trend actually emerges post the event, and once the event is out of play, once the IVs drop down significantly for the markets as well as for individual stocks and indices, I think that's where the real trend would emerge. So I think it's a matter of patience over here, and for someone who's not looking at you know, just 1 or 2 days kind of heightened price activity, I think it makes a lot of sense to try and wait out for this volatility to settle down.
Volatile it has been. Just let's quickly pull up some of the drags in the market today. So Bharti Airtel is down 2.5%. That's pressurizing the Nifty by 20 points. TCS is coming under pressure. And while the Bank Nifty is showing you an uptick, it's Kotak Mahindra Bank which is down, Axis Bank which is on the back foot. So clearly it's only HDFC and ICICI which are actually on the upside, while Kotak and Axis are coming under pressure right now. A quick view across the globe as well. Not that it matters too much right now, because we have a whole host of our own cues to deal with. But for now, the European markets have opened in the green, and the pre-market rates in the US are a bit mixed. Dow is pretty much flat, but the Nasdaq future is suggesting a downtick of around 50 points. Well, let's welcome on board our fundamental experts as well. Hemant Shah, fund manager from Seven Islands PMS, as well as Sanjeev Bhasin, as always, joins us on the show. Mr. Bhasin, let me start by asking you, it's the last 1 hour before you can probably take some positions if you want to ahead of the exit polls. Any strategy you would want to recommend?
Yeah, so Anisha, I think staying invested is the best strategy, because we thought that this correction was much overdue, in the sense pessimism and rumor mongering on fate of the results that will only be unfolded on the morning of Tuesday. And I think that it's very, very healthy for the market that we've seen a 500-point correction. We were of the view that before June 4th, but I am very, very strong that we go and test those new highs on the 4th, itself, that is 23,300. Simple reason, I think, even though the same numbers will not come as last time, but you will get the clear majority, and that will be enough for the market. The undertone remains strong as far as PSUs, as far as results, as far as macros. Oil is on a weak wicket, bonds are falling, and I think Indian demographics are playing excellent. So if you have been waiting for an opportunity, then opportunity will only come with the fear. And I think this is a very good time to nibble into good stocks. We have turned very positive on some of the insurance plays. They act as good defensives. There is good gross net value additions and so on. So LIC, ICICI Pru, but our top picks are SBI Life and HDFC Life. We think insurance, there is all rumor mongering on the IRDA. There is going to be no such change on surrender value. And the gross net value additions in the masses as insurance is a very, very strong play. And you cannot get such pedigree stocks languishing. So those are some of our themes. We are also bullish on banks. And as you know, HDFC Bank has been an outperformer. And Anisha, today again, there is circuit on Ratan Power at 1925. So more than 120% return there. And that's telling you that there is humongous amount of opportunity in select mid and small cap, where restructuring and the asset allocation has played out brilliantly.
Absolutely, another 5% higher on that stock as well as we speak right now. But since we were talking about insurers, IRDAI is likely to come up with a new commission structure in life insurance. They may announce the new structure as early as the month of June itself. In fact, my colleague Anurag Shah is here with more details on what he's picking up from his sources.
Insurance regulator IRDA is likely to come up with a new commission structure in life insurance industry, and as per our sources, life insurance companies have submitted their suggestions to regulator, and in month of June IRDA is likely to introduce leveling commission structure against the presently prevailing structure of high upfront commission. So the new structure will help life insurance sector to increase their persistency also, because agent will get a commission for more number of years. So upfront commission will reduce, but trailing commission will increase. Other than that, the front loading cost of life insurance industry will reduce. That will also result in a better surrender value for policy holders. There is again a feedback has been given from life insurance industry to increase the special surrender value. We may see that going ahead. Again, the IRDA may go back to the December 2023 draft where they have suggested a higher surrender value. So there is a link between these two also. So upfront commission will reduce and trailing commission will increase for more number of years. So couple of suggestions has been given by insurance companies to regulator. So going ahead in month of June, as per our sources, IRDA is likely to come up with a new commission structure for the life insurance industry.
Okay, thanks Anurag for that. Let's welcome on board Hemant Shah as well. Hemant, hi, good to be speaking with you. We have been polling a whole host of market experts on our shows, and they believe that the market hasn't made the top yet, and the themes which have worked so far, which is your infrastructure, PSUs, capital goods, defense, is likely to continue. And in fact, that's the brokerage consensus as well right now, that BJP is coming back to power, and just stick to the themes which are working out well. What's your market outlook right now?
Thank you for having me on your show. Yes, we have also the same view. We are absolutely positive, taking advantage of this fall also in terms of bit of buying. We also started buying in our fund also. And I echo the same view as Sanjay ji shared. We are absolutely positive on capital goods. The macros are in our favor. The result season has been, in fact, very much encouraging. Q4 usually is a strong quarter for infrastructure and capital goods companies, but this time there are many surprises than many misses rather. In fact, one observation in terms of the results, that multinational companies have posted amazingly strong numbers. I mean, if you observe the capital goods sector, say for example bearings, or for example a few multinational large MNC chemical companies have also posted good results. Most of the chemical multinational companies have posted better than expected results actually. So this sector is cap goods, defense, manufacturing per se. We are very positive.
Sanjay, what is your strategy? Would you say that one would have to sort of tactically change your portfolio stance, ease off from the PSUs, increase your allocation to large caps? Or would you say keep doing more of the same? What was working earlier will work even later if the current regime were to continue?
Well, if the current regime continues, anything with Hindustan or Bharat, you have to buy those stocks because they will go again back to now. But we are of the view PSUs may have fully priced in defense, railways, the next 3 years of capex. We are very, very optimistic on the private side. The banks, HDFC, ICICI, the insurance companies, SBI Life, HDFC Life, and some of the technology names. We think Wipro, ITC, Infi, and we are also bullish on the mid caps, particularly in stocks like India Bull Real Estate, and why not Vodafone, which is back and running as the not 2.5 but as a third player. And I think price hikes, volume growth, and going into 5G on the capex side is going to reinforce business. So stock specific, pick up your good portfolio, but I think the underperformance of the private sector will now come to the shore. And if the markets do correct, these will also stand out as defensives, particularly insurance. So we have bought a bit of insurance in the sense we are insuring our portfolio, but we also think that select PSUs will do outperformance over a period of time.
You can still hold on to, but it's time now for the private players to actually participate. Let me just put the spotlight on some of the stocks. PTC Industries, for instance, is up around 10%. Antique actually initiated coverage on the counter, not PTC India. PTC Industries is the stock I'm talking about because that stock was higher by 10 to 11% the last time I checked. That's because Antique had initiated coverage with a buy stance and a target price which was over 67% from yesterday's closing. Welspun Corp down 7-8% after revenue missed street expectations, and even the profitability was subpar. Zomato is down 3-4%, though it's kind of recouped most of its losses, so it's down about 2%. But Macquarie believes that the rising competition from JioMart might just impede growth there, while Titan continues to glitter. There was that analyst day today. They're eyeing almost 2,000 crore revenue from eye care. Jewelry business is expected to grow at 15 to 20% with a 10 to 11% market share. So that's the latest coming in as far as some of these stocks are concerned. But Hemant, if I had to put the spotlight specifically on Zomato and some of these new age tech companies, what would be your recommendation now? Because yes, they had disrupted the market, but Street already seems to be penciling in the best. Look at Zomato, 180 on the price.
Yes, we were very positive on Zomato. I mean, just a year back, we had invested in our fund also, but I must say that we have exited, and on the expectation that there will be tremendous competition going forward. I think one of the second player is also eyeing the market and ready to list on the exchanges. And the ONDC part, I think that is also growing in a big way, which will have some part of the competition for Zomato. And that is the only reason we have exited. But having said that, there are few other technology companies actually. See, for example, Zaggle. It's a very niche segment they are into. I mean, those kind of niche segment, we are really positive still. The potential is immense. The market is big. So we need to have such kind of player to garner the market share and having first mover advantage.
Hemant, stay with us. Lots more to discuss. Sanjeev, you too, but we'll do that after this very quick break. Getting choppy out there, at least for the indexes. But yes, individual names, they continue to hold out, especially the Adani group of names. But all eyes also on Motown. They'll be declaring their May auto sales numbers. So let me take it across to Shrishti, find out what the street is penciling in. When we talk about the auto sales data for the month of May, we have to take note that in the month of May, there were no major push from the marriage season, no festivity around. Other than that, there were the heat waves around the country. So that impacted the footfalls, and also some of the rains in some of the select parts of the country actually dampened the agri segment. So all of this could trickle in, meaning that we are not entering, or we are not expecting much of an optimism from the month of May. And the big trends that we are watching out for was on your screen, for two-wheelers, the retail momentum is largely expected to be sustained. The passenger vehicles demand discount expected to be stable month on month. From the commercial vehicle segment, the low base is expected to lend the support. Now, when we talk about the company-specific expectation from the passenger vehicle segment, the key to watch will be actually M&M, because everybody is highlighting that the new offering of M&M is actually getting a lot of excitement from the footfall as well. But other than that, because of the heat wave conditions, the footfall of some of the other companies actually got impacted. So M&M will be the key to watch. This time we are expecting 72,633 units from their automotive division. Coming to the commercial vehicle segment, herein Eicher Motors as well as Tata Motors is expected to post a growth of 2 to 15% on a sequential basis, but that will be on a back of a decent base. But do watch out for Ashok Leyland, because the company management was quite optimistic, and they did say that because of the elections they are not seeing any impact on the sales. April month was pretty well. For May month they were also sounding positive. So 14,633 units is what we are expecting from Ashok Leyland. From the two-wheeler segment, this could actually be the key segment to watch out for, because from all the other segments, this segment could actually flare better. From Bajaj Auto, TVS Motors, Eicher Motors, though we are expecting a flattish sort of a growth on a month-on-month basis, but do watch out for Eicher Motors, because this time we are expecting the sales to be 82,233 units. So let's watch out how the numbers pan out. But apart from that, even the exports are expected to flare better. And lastly, from the tractor division, we are not expecting much, though there could once again be a decline, because like I mentioned, that because of this rains in some of the select part of the countries, especially in the state of Maharashtra, that dampened the agri segment, and that could actually impact the numbers as well. From M&M tractors, we are expecting a decline of 12% on a month-on-month basis, but because for escorts, on a back of a low base, 8,560 units is what we are expecting, and that could lead to a jump of 14% on a month-on-month basis. So those are the expectations. We are not expecting a blockbuster set from any of the segments, but definitely two-wheeler will be the key to watch out for.
Okay, thanks Shrishti for that. Let me pose that question to Mr. Bhasin then. Sir, what's your expectation from the auto counters now in terms of the alpha generation? Because today Bank of America was very bullish on M&M as well. They upgraded that stock well above 3,000 rupees.
So Anisha, our topic continued to be Maruti. Ashok Leyland, which has been a darling of a stock all the way from 150 and now new numbers. Ashok Leyland, I think, is headed to 300. And lastly but not least is Bajaj Auto. We still think Bajaj Auto is going to cross that 10,000 mark. So these are the three names we have. Yes, M&M was one of our top picks at that 650, 700. We have tended to book profit there because we think large part of everything is priced in. But the new launches will do well. But we are more bullish on Maruti, Ashok Leyland and Bajaj. And in the OEM, Motherson Sumi, we think that is another stock which can be re-rated.
Okay, so that was about some of these auto counters which are in focus. And in fact, since we're talking about auto, we did speak with the management of Landmark. They are talking about the kind of growth the industry is expected to really play out. SUVs has been a big trend and it has played out. And now, in fact, NSE is coming out with an electric vehicle index as well, telling you the entire transition that is happening and which players are perhaps likely to ace that game. In fact, listen into a slice of that conversation.
We all know that the luxury car penetration in India is pretty low, and we are at a takeoff stage. So the luxury market grew twice the pace of the passenger car market. And the belief is that that phenomenon is likely to continue for a long time to come. We have an election year. We have a high base. Notwithstanding that, I believe that the growth, multi-year growth, is here to stay.
Right, okay, that's the take coming in from Landmark Cars and what we're anticipating from the market per se. But cap goods, let's just see where, those players are. L&T, of course, has really been on a tear off late, and today as well, it's been a strong one. But what about the entire MNC pack? That rally kind of stalled, but let's revisit the likes of an ABB, Siemens, etc. and see where those stocks are currently. They will just come off here on your screens, a little bit muted in trade right now. Kunal, L&T still the strongest of the lot, or are there any smaller plays that you would recommend?
From the cap goods space?
Yeah.
No, I think L&T is something which is more formidable and far more stable at current levels. In the last 3 weeks also, the stock has done reasonably well from 3,200 mark towards, I think, 3,700, 3,750. which the stock tested this week. I think it's been doing exceptionally well. So I think even at current levels, it looks very strong compared to the likes of ABB, Siemens, etc. This stock had relatively underperformed in the last 2-3 months or so. So I believe that even if there's a catch-up play for the stock, I would expect that it should at least retest the levels of 3800, 3850 mark, which is the previous high.
Okay, point taken. Hemant, since we have you with us, I also wanted your view regarding the Adani group of stocks. Interestingly, Jefferies came out with a note this morning saying that the entire group's EBITDA growth has been 40%, the leverage ratios have improved, and they listed out for each of the company as to what are the key drivers. What within the Adani group would you pick?
I think the only pick in the Adani group we can pick is the Adani ports. So basically, Adani Group is the market trader's delight, I would say. It's a momentum play rather than anything else, but we genuinely believe in the fundamental story of Adani Port.
Now, but since you're calling it a trader favorite, let me toss it to Aditya. Not really a trader, but at least from the chartist point of view, what would you recommend, Aditya, within the Adani Group for a quick money sort of trade on Adani Group?
So I recommended Adani Enterprise just few hours back on Etina Swadesh also, and I think the trend is still positive, and this is one of the stock which could show very high beta moves given the election results. So I think one can buy even right now at 3395, and this stock is expected to break 52-week high, which is placed at the recent swing high, which is placed at 3455. And that would be the first target, and second target would be 3,700, and one must maintain stop loss at 3,200.
Okay, that's some of the Adani group of names which are looking fairly active today. Where is the entire pharma rally? It began nicely start of the week, and in fact, the last fortnight or so. Today, of course, Ipca Labs is down about 7.5%. But what about Divi's? That's also actually lower, 1.7%. Want to see what Sun Pharma is up to, what DRL is doing then. And some of the MNC pharma names also should come up for you on your screens. Fizzled out quite soon, Kunal, or is that not a trend right now? You think they will come back, pharma names?
No, I think it's a risk of across the board for the index. It's not as if that the defensive sectors like FMCG and pharma are getting shielded. I think it's profit booking across the spectrum which we're seeing, whether it's high risk sectors, whether it's low risk or low beta sectors. So I believe that once the dust settles out and once the event is out of the way, I would believe that the pharma stocks, the FMCG names should make a strong comeback. As it is, I think many of the charts from the individual spaces, specifically for pharma, I think they were showing a lot of strong bullish momentum for themselves. So whether it's the likes of Lupin, Glenmark Pharma, which had made a new high, Zydus Life, etc., Aurobindo Pharma, I think all of these stocks should make a strong comeback.
So on that note, actually, we'll do one thing. We'll slip into a very short break. Thanks, Hemant, as well as Sanjeev for making time and speaking with us today. But as we slip into a very short break, listening to the commentary coming in from Standards & Poor's, that is the S&P, they of course had revised the overall outlook for India. The rating was still BBB minus, but the outlook had improved from stable to positive. Listen into that soundbite as we slip into this very short break.
Believe that Indian banks will maintain strong financial performance over the next 12 to 24 months. In fact, in the base case, we do believe that the banks are more likely to slow down their credit growth to about 14%. In that situation, deposits will still continue to lag the credit growth, but the competition for deposits will be manageable. And in that situation, we do expect only a 10 basis margin impact.
Over the past 2 years, despite the global macroeconomic shock to supply, India's inflation rate never went above 7.8%. So I think that's really credit to the RBI for acting on time and managing this inflation rate expectation quite well.
Back with closing trades right here in ET now, and getting wobbly for the closing trades like we mentioned earlier. Of course, while the Adani group of names are still holding out, the Nifty definitely has given up the 22,700 print on the futures. Bharti, Maruti, Hero MotoCorp, Eicher, TCS. They're all the names which are under pressure. It's flattened out or rather weakened for Axis Bank, which is down about 0.6%, one of the big movers or resilient ones from yesterday. But the MSCI quarterly rejig is in focus, and equities may see a total inflow of about $2 to $2.5 billion. What are the key inclusions and exclusions? What's going to be the impact on the stocks? Samit is here with all the details.
Well, if you see, MSCI had few days back announced this changes to their indices, that is the main index and the small cap index as well. And today the flows are expected regarding these changes, and these flows are likely to come in the last half an hour of trade. So which are the stocks that would largely remain in focus on the back of flows? Firstly, it's PB Fintech and Sundaram Finance, which are expected to see an inflow of anywhere between 200 to 232 million US dollars. Apart from that, it's Phoenix Mills, NHPC, Industars, which would see an inflow of anywhere between 160 to 190 million US dollars. Then there is Torrent Power, Bosch, Thermax, which could see an inflow of anywhere between 120 to 150 million US dollars. And then there is Canara Bank, JSW Energy, Jindal Stainless, which could also see inflow of anywhere between 160 to 187 million dollars. On the deletion side, if you see, it's Berger Paints, Paytm and IGL, which could see an outflow of anywhere between 57 to 94 million US dollars. And because of higher weightage, it's AU Small Finance Bank and Macrotech, which could see an inflow of close to 36 to 77 million US dollars. On the weightage downside, if you see, it's PI Industries, Dabur, ICICI Lombard, Bajaj Industries and Reliance Industries. Reliance Industries could see an outflow of nearly 168 million US dollars on the back of lower weightage on the MSCI index. When it comes to the small cap index, there are stocks like Sundaram Finance Holding, Greenlam Industries, RR Cable, Alok Industries, Dynamatic Tech, which could see an inflow of anywhere between 3 to 8 million US dollars, while on the deletion side, it's Nexus, REIT, Tatwa Chintan, Borosil, Indico Remedies and Rajratan Global Wires, which could see an outflow of anywhere between 1 to 10 million US dollars. So keep an eye out for all of these stocks in trade, because there will be MSCI flows in the last half an hour of trade.
Thanks, Amit, for that. And as we speak, these flows are actually having an impact. Pull up all of these stocks. Policy Bazaar, for instance, in the last few minutes itself, up 5%. Torrent Power, another 5% move in the last few minutes itself, because all those inflows are actually getting factored in. Jindal Stainless, the other name that you mentioned, Somit, is also seeing a huge green bar perhaps at the end, because flows are coming in for all of these stocks. 12% higher on Jindal Stainless right now. Force Motors, Thermax, these were some of the names that you actually took, and all of these stocks are seeing those inflow impact right now. So all of those green bars are telling you that there is that plant infusion. On the deletion side, let's take a look at Max Financial, 6% downtick there. And the other one I wanted to highlight is, of course, Tube Investments. That too is down almost 5% as we speak. But time now to take it to Ansh. He's joining in to talk to us about the price volume buzzers and how the overall setup is right now. Ansh, over to you.
Right, so Adani Enterprises will be the first stock in focus, as you can see in the chart as well. The stock is already in an uptrend, but recently it had shown some retracement from high level, but today it has given a breakout from that retracement as well. This breakout is backed by a good volume of around 1.8 times its 20-session average volume, so this keeps the bias positive. Apart from this, NMDC will also be in focus, as the stock has actually given a breakout from its downward sloping resistance, which was intact for 7 to 8 sessions. Also, it has been taking good support at the 20 DMA. Lastly, Canara Bank will be in focus, as the stock has actually given a breakout from its downward sloping resistance trend line with volume of over 2 times its average trading volume of last 10 sessions, showing good participation in today's move. Lastly, let's have a quick view on FNO data as well. And it's key worth highlighting that yesterday we saw massive long covering by FII by over 2 lakh contract, indicating that bullish traders have actually backed off just before the election results, while the bearish traders are still holding big shorts. But at the same time, we saw that retail traders are adding their bullish position by a lakh contract. So it's like a competition between FIIs and retail traders, with FII being negative on market and retail traders being positive on market.
Intraday, if I have to go with the direction, that I'll go with the negative side, with the view that market is forming the lower highs, lower lows from last 3-4 days, and trend is turning lower. So I'll go with 22,300 put. However, one need to keep in mind that decay may happen fast if you carry the position overnight. But I want to play with the trend setup, which is slightly negative now. So I'll go with 22,300 put, which is now near 275 levels. I'll buy this put near 222.30 with the view that once it can hit towards 350 marks.
I would really think that it's better to wait and let the VIX drop, because I wouldn't want to fight the volatility game when we are really trying to take a directional view. So it is better to really let that happen and then take a directional view post the event, is how I'm thinking about it.
Okay, let's welcome on board Gurmeet Chadha as well and find out what he's making of the market right now. Gurmeet, hi, afternoon. Good to have you on the show. Firstly, tell us, how is it that you're coping with the Delhi heat? I believe it's already touched, what, 50, 52?
Yeah, I mean, staying indoors, praying that, the monsoons come in early and buying some consumer durables, especially the AC makers, combination of that.
Managed to get your hands on them, because what reports we are hearing suggest that there's an acute shortage of air conditioners and other consumer durable goods.
Yeah, so there is a shortage. The discounts have virtually disappeared. Also, not just with air conditioners, also refrigerators and even air coolers. So we are looking at something like Voltas. Obviously it did well, and then the result disappointed, especially the EMPS space. Also, I think with per capita spend going up, I think fast moving electrical goods, home improvement and auto tend to do well. So if you compare and draw parallels to, let's say, China, which had, let's say, a 15-year period where per capita GDP grew by 13-14%, the consumer durable segment grew like 20%, auto did 26%. So I think it's a more a long-term play there, and any tactical opportunity like this, extreme weather conditions just probably gives you a better entry point.
Right, okay, indeed. But Gurmeet, what about the rest of the market? Just what, 20 minutes, and then Monday morning we're going to be reacting to the exit polls. Do nothing, you would say, till the June 4th decision?
No, I would say, just stick to your plan. I think what we have seen is that I think you have to work on probabilities in market. If you are an equity investor, for 100% probability, there is fixed deposit, right? So you have to work on probability. Our stance is there is a very high probability of continuity in government. I'm not a cephalogist, so I have no idea in terms of how many seats they will get. But there is a high probability of continuity. And I think our stance of buying on dips so far, I think this has paid off in last couple of years. So market has given great opportunities in financials. I think Bank Nifty has really struggled despite good earnings growth. And I think with 10-year dropping, cost of funds dropping, I think you will see eventually financials coming back. This very strong order book on capital goods. We've seen excellent numbers from ABB, from Siemens. I saw Cummins numbers yesterday. That's another theme, which I think we are in a strong investment cycle. So I think stick to basics. Event risk, we are not on the technical side, but I think a market going into an event with FIs being so short and light, and my technical friends on the panel can tell better. I have not seen this kind of bearish positioning by FIs for a long time. So I think it is good if you head into an event with very light positioning. It augurs well, and my sense is I pray for continuity, and that's the reason we've been buying on dips.
So that's a very clear conviction coming in. But yes, either the FIIs are sensing something which we don't know, or the market is not factoring in yet, or we are poised for a bit of a short covering. But all will depend on what happens on June 4th, or which direction at least the exit polls take come tomorrow evening. In terms of the big movers right now, Techno Electric stock is up 17%, Jindal Stainless is up 12%, BKG Foods has seen a solid rally of 10%, Policy Bazaar, DB Realty, Vesuvius India, all of these stocks are flying away, and I'm not even naming the Adani group of stocks because they have been on a high from the last half a day or so, and BSE too has actually managed to perk up in the last few minutes. In terms of the other internals of the market, what is your view, Gurmeet, as far as the entire auto sector is concerned, because the data is expected tomorrow? Any surprises that you're waiting by for?
No, not really. I think, as I said, I pointed out, we expect auto to do well, especially the four-wheelers to do well. If you see the numbers, I think we are barely crossed. So four-wheelers, we have crossed 2019 numbers. Two-wheelers, we are still 10-15 lakh units short. We did, 2.35 crore units in 2019 pre-COVID. We probably did this year, I think, 220, if I'm not wrong. So I think we have a long pending demand, and there is some valuation comfort, especially may not be as much in TVS after the run-up, but there's some valuation comfort in Bajaj and Hero. And there is a lot of good ancillaries. Sandhar reported very good set of numbers. Their two-wheeler, four-wheeler mix is now almost 50-50. They are market leaders in locks. They're doing very well on the cabin, the castings, fabrication portfolio, and they're trying to build more EV portfolio. So that's something which we like. Uno Minda again has almost a 45-55 mix of two-wheeler, four-wheeler, great content and premiumization per play, and it offers you all three features. One is convenience, which is your switches, and basic features of the car. Then there are safety features like sensors, airbags, and then you have the premium and the content features in the EV portfolio. So they're adding a lot of new capacities. Alloy wheel plant getting fully operational this year. So we're playing that, and we are liking four-wheeler space. So we've been adding Tata Motors with some correction, which we have seen recently in the portfolio.
Right. In fact, let's hear it out as well from Kirloskar Pneumatic, and they remain pretty optimistic about growth across all verticals.
So the growth is going to be across all our three verticals: the air compressor business, the refrigeration compressor business, and the gas compression business. And this is coming from the traditional industries: oil, petroleum, fertilizer, general engineering, etc. The compression segment delivers a profit in the range of 18 to 20% EBIT. We expect to continue in this area. The company's EBIT margins are directionally moving towards 18, and it will go there with increased volume as well as better product mix.
Right, okay, that's the word coming in from the Kirloskar Pneumatic Management. And let's just take stock of some of the other movers as well. Titan, for instance, the management commentary this time around indicates that, the jewelry segment's got a market share of about 10 to 11%. Eye care, they aim to achieve about almost 2,000 crore rupees revenues by FY27. So that's one stock which is in focus. The underperformer today, of course, has been Zomato after Macquarie putting an underperform rating on Zomato, saying that the competitive intensity is only on the rise and they continue to see downside to the consensus estimates. Gurmeet, what's your take on Zomato? It's consolidated around 180 for a while now. Today it's dipped sub that level, but do you think that peak of 200 plus is way gone for Zomato?
No, we are actually quite constructive here. I think so barring the food delivery business where contribution margins now continue to be above 6, almost 6.3%. Quarter on quarter, if you see the gross order value is picking up, and they've added a minor convenience fee, and they're giving now different experiences like bulk orders and vegetarian meals, etc. Mind you, they have their own rider fleet upwards of 12,000. And I think the dark horse has been Blinkit. I think it's EBITDA break even now. Ahead by 2 quarters, they guided for FY25 end. And their contribution margin also is now picking up. It's already around 3.2, 3.3 if my memory serves me right. And the average ticket size is improving as you move from groceries and convenience to, gold bars, electronic stuff, etc. So I think Blinkit put something which quick commerce can really add significant there. And I think, mind you, they have huge data analytics. And so they can pivot and do better. Hypersure also seems to be doing okay. So we are actually very constructive both on Zomato and Policy Bazaar as some of the new age businesses we are actively looking at, adding in our portfolio.
On some of these counters, but let's take the BDSE trade, and today's BDSE trades are going to be very, very important and critical. Aditya, what would be the BDSE trade on the index and on stocks?
First pick would be on Policy Bazaar. We have seen good action in this counter recently. Today there was MSCI adjustment also. So one can buy Policy Bazaar at 1285 and stop loss would be at 1180 and target would be 1380. And the second counter is we have seen good consolidation and action in a lot of mid-cap stocks. So, but one stock that clearly stands out is Adani Enterprise, which shows very high beta moves. So this one is a good buy at 3403 and stop loss would be 3200 and target would be 3600 to 3700. And a disclaimer is that I have recommended this stock to my clients, so one must do their own analysis before taking a financial decision.
Okay, that's the take coming in on some of the Adani group of names. Kunal, any strategies that you may have?
So I'll go with two buy calls. HDFC Bank remains to be the top candidate in the private sector banking names. I think at current levels of 1530, 35 approximately, it should close above the 200-day moving average also. That could probably be a good technical breakout factor for HDFC Bank going forward. So I would suggest a buy with a target of 1570. Stop loss could be kept at 1500. And Dr. Lalpad Labs is something which is coming back into the breakout mode on the weekly, monthly charts. The stock forming an inverted head and shoulder pattern and being a lot more resilient, in this kind of a market also. So would suggest a buy with target of 2710. Stop loss at 2580.
The other sort of conjecture in the market is how long the entire PSU rally, especially, your defense, railways, etc., is going to last. And whether, again, the heydays there are over and are you going to see a massive bout of profit taking post the election verdict? What do you have to make of that?
I think two things you have to differentiate now. I think there has been obviously it's been a great run for the likes of defense names like HAL, Mazgaon, Cochin shipyards of the world, Bharat Electronics, etc. And then you have even SAIL, let's say, outperforming Tata Steel, by a huge margin last year. So I think valuation comfort is now receding. You have a lot of these PSUs now trading at 50 times. HL is almost 45 times. Bharat is upwards of 50 times. There's a lot of this business is lumpy. Now, HL could be an exception because 60% probably comes from service and maintenance. So there's some bit of continuity there. But, there are a lot of risk and offset clauses in a lot of these defense contracts. And you can have some bit of bumpiness, and some delay in orders happening or some recall happening if there are technical issues. Right. So I think got to be a little more selective. So I would prefer right now incrementally, let's say, going towards, names like PSU banks, where I think there is still comfort, like SBI is still 1.2, 1.3 book value. Bank of Baroda is around book value. And I think the ROAs are now 1% and above now for a sustained period of time. Similarly, on railway defense, there's no harm in probably taking some money off the table post-elections. There could be a bit of a bump if there is continuity. But I think some part of the portfolio now needs to be moderated. Similarly, a lot of power finance companies, if you see, are trading at 4 times book. Now, you have HDFC Bank trading at 2 book and let's say ICICI at 2.7, 2.8 book. So I think at some point of time, some rationality will come. So no harm in trimming 10-15% of the PSU portfolio and maybe being a little more selective post-elections.
A little bit more selective and no harm actually trimming positions there. In fact, that's exactly the question that we posed to a whole host of market men and CIOs as well. Here's what they had to say about it.
PSU space that we are in is mainly the oil and gas space. Some of the banks are there with us. And obviously some of the defense players are there with us in the PSU space. So I think even if there was some amount of uncertainty, these spaces are quite sanguine. Probably oil and gas would have been a question mark. But still we believe that given that the budget is going to be in July, there's still a lot of steam left. Even after the election results are out, I think the run up to the budget should be good.
PSU banks is something we have been quite positive and we continue to remain positive. But let's say for that example, oil and marketing companies, we have not been at all buying because the governance is not fixed. It's a lot more political. So government interference keeps on happening every time price of oil goes up and down. So we basically prefer where there's a tailwind of the sector, when there's a least government policy interference is happening, is more run by the individual banks, individual organization, then the leadership of the organization has to be good.
Okay, so that's about the CIO, a verdict on the entire PSU pack. But take a look at the market in the last 15-30 minutes. Yes, there has been an impact of that MSCI flow, but nonetheless, a sharp recovery when it comes to the Bank Nifty, almost 1 percentage point. And the mid-caps too have managed to rally quite hard. So on Nifty, it's not quite visible, but I think it's on Nifty Bank as well as the mid-cap index. And I think large part of that mid-cap index, rally would also be perhaps on account of those flows that might have come in. So Nifty has managed to, Nifty Bank has managed to be past that level of 49,000, and the Nifty 2 has managed to inch on further gain. The mid-cap index now almost 600 points off the lowest point of the trading session, but it's the frontline index which is very, very quiet. But clearly, Kunal, the volume is picking up just ahead of that important event. 7 minutes left for the trading session, and then come Monday morning, it will be one way or the other.
Yeah, it should be one way, not the other. Let's hope it's the bullish
It's
way.
best for the markets, right? That's
One
what
way
we
up.
want for.
Yeah, it has to
One
be
way
one
up.
way up. It's been
Yeah.
too much of volatile over the last 1 week or so, and I think the best case for the markets right now is the volatility to subside. I think that's the only thing which a trader or an investor is looking out for, because then real patterns would start to emerge for stocks, for sectors. And the prices, they get in sync with news flow to try and react on the positive negative side. Right now it's completely unsynchronized in terms of price action. So I think that's the key data point to look out for. Yes, the last half an hour, last 15-20 minutes, the buying is on the back of much higher volumes, and good part is that the Nifty and the Bank Nifty have both have come back above their strong psychological marks. Nifty has come back about 22,500 mark, and Bank Nifty above 49k.
Okay, that's the take coming in on where to place your bets ahead of the exit polls. In the meantime, it's, you can't really pin up or rather pull up any decisive trend, so to say, in the market. Yeah, the Adani Group names are holding out. You've got an odd Bajaj Finance looking good. L&T is holding out. Some of the private banks, of course, not looking bad. HDFC Bank clearly right on top there. ICICI Bank, Indices as well, holding out well. SBI, not from the private lot, but that also has been, sort of matching shoulder to shoulder with the likes of ICICI Bank and HDFC Bank of late. Reliance as well holding about 0.5% higher as we speak right now. But Gurmeet, just wanted to get your sense in on, where do you think leadership will emerge next when it comes to the large caps and the Nifty constituents? Is it as obvious as private banks?
No, I think should come back as cost of funds come off. Maybe rate cut cycle towards the last half of the last quarter of the year. I think capital goods and I think infrastructure, I think in my view will lead. I think the commentary is pretty solid, and we have a slightly view now on rural recovery. So a bit of maybe while FMCG index today probably gave up some of it, but I think that's something you should play now. The rural recovery, a new government in place, more shops to there's some green shoots visible in the rural economy. So, some of the auto names, FMCG names, agrochemicals, they've been suffering a little bit due to China factor, inventory destocking now playing out. So I think rural recovery, financials, in my view, will lead it, and capital goods. So I think these are the three themes in my view. And there could be a bit of rotation, profit booking from the defense names, railway names, more towards these names.
Okay, Gurmeet, we'll let you go on that note. Thanks as always for taking the time out and joining in. Aditya, just wanted to get your sense in as well. I mean, I know lots will change tomorrow when the opinion polls come out. But just by your reading, we're managing to close about at that 22,730 odd mark for the Nifty futures. What do you think is in store on Monday morning?
So we are maintaining bullish bias for Monday morning. So we are going long on the market, and one can also, go long on the market with stop loss of 250 points. And target would also be about 250 to 500 points in next 2 days. So that's how we are playing the market, because when the exit poll numbers will come tomorrow, probably market will price in good numbers. So hence there could be a bump up in the market.
Okay, point taken. So Aditya's view is that go long. Kunal, what's your view? Still do nothing, or there is at least a bit more tilt towards going long now?
Yeah, so stock specific, the portfolio is long, would maintain that long bias. I think many of the stocks which I've highlighted, HDFC Bank, L&T, HUL, etc. I think these stocks have been doing reasonably well for themselves. So maintain the bullish stance over here, and buying Nifty as well as Bank Nifty in this kind of a scenario is pure speculation, and with absolutely no idea in terms of what could probably come out in the exit polls and how the markets could react on a secondary basis. So I think on that context, it doesn't make sense to just go for a speculative buy over here. But yeah, I think on the stock specific front, I would believe that there are a lot many better opportunities, even if these stocks show some signs of stability as well as going forward, some pickup in trend.
Okay. Well, just to mark what the globe is up to, because Europe hasn't had a very confident sort of start. Asia, of course, was okay, although markets like Hong Kong and Shanghai completely reversed their gains that they started off in trade with. And even the pre-market US rates are indicating a bit of a soft start. And this, mind you, is after a weak handover that we got overnight in any case from those markets. So yes, Adani names are right there on top with Adani Enterprises with a 7% move. Idea is put up very nicely, about a 4.5% uptick coming in for that name. Adani Ports, NMDC, GMR Infrastructure, Shriram Finance, HDFC AMC, BHEL, Ambuja Cement. These have all been large caps which have performed very well in today's trading session. Trent, eventually gave up its gains, closed in about 2.5% lower. Persistent as well saw some profit taking. Berger Paints, Ipca Labs, Divi's Labs, REC, Exide. These are all names which softened a little bit in trade.
Mark India Wix, because at one point of time it was down 5% and by the end of the day it's up 2%. So there's actually a move of almost 6-7% on India Wix on an intraday basis. It's actually nearing 25. So while of course the case is being made that post-verdict it will come off, today we saw initial signs of it, but that's not the case. The nervousness really continues, and look at the advance decline ratio. It's still favoring the declines versus the advances. So lacking conviction a bit, but still at least 22,500 was being held. In terms of the big movers, you had Techno Electric up 20%, Jindal Stainless ending the day with 14% gain, Adani Group of Stocks as we highlighted, Sundaram Finance as well as BKG Foods were big gainers, and BSE 2 moved on heavy volumes. On the losing side, earnings reaction for Welspun and Ipca Labs. Page Industries was coming under a lot of pressure, and Berger Paints too, surprisingly, was down and out in the trading session. Vodafone Idea 15 crossed, a 5% up move. Zomato flip-flopping between the red and the green on account of more competition. So very interesting day. It's panned out, but it'll be more interesting in the coming week. You'll have exit poll, the final verdict of the democracy, the RBI policy and whatnot, because over the weekend you'll also get the auto sales data. It's going to be a crazy week, so let's take the break while we can. Have a nice weekend, all you guys from the team of Closing Trades.